2026 is right around the corner. And you know what that means? Tax season is right up coming up. It's October. We need to get prepared. I want to give you the 5 steps, the really smart things that you should be doing before tax season 2026 arrives. If you like this video, like and subscribe. I would love to make more if you're showing me that you're really enjoying them. Now let's get going with the rest of the video. Number 1, organize yourself. If you have a business, we need to really start going backwards now if you haven't already kept going on and maintaining organization throughout the year. Believe me, you don't want to wait. You are going to forget by the time February or March comes around of next year. So I'll give you an example. Let's assume that you have a photography business or any business in which you made $20,000. Going and looking at your mileage. Let's assume that $3,500 was done in miles during the year, traveling to the different places that you went to do the photography work. Let's say you bought new camera equipment or office equipment or things that you needed. You put it together. That's another, let's assume is another $7,500, and just miscellaneous home office, electric that you may have used at home that you need to prorate to make sure that you get your deductions, taxes, insurance, so many little things that could be in the miscellaneous items, and every business is going to be different. If you do not collect and organize all of this, also to audit prove yourself, you may end up paying taxes on a lot more than $3,500. If you're not doing something like this now, you need to get started yesterday. You can pay taxes on this or even less. You could start doing this by using a spreadsheet. You could use QuickBooks. There's many different ways you could do it manually. Whatever works for you, just do it. Get started now. For those W-2 income earners, I'm going to have in the next few steps that I'm going to give you, I will give you more organizing tips. This is mainly for business owners, this example. Maximize retirement contributions. You could do up to $23,000 in 401k, for example, as a W-2 income person. And if you have your own business and you are collecting payroll, so you could do up to $23,000. This is going to lower your taxes at the end of the year. This is paying yourself. This is going to make the load lighter. Make that change now. Go and max it out. You're going to say to me, okay, well, what am I going to do? I am not going to have the extra money, the extra $50 or $100 that is going to be taken out of my paycheck. And yes, you're right. But here's how you want to look at it. You can look at it as a tool. Most 401ks are going to allow you to borrow against it. So unless you need the money right now every week, maximize it, because you're going to have to pay the IRS at the end of the year or during the year for income that you probably could put it away and later on, if needed, borrow against and pay yourself interest. When you contribute to a 401k, that money is working for you. If you pay back interest, you're only making it grow. Your own money pre-tax, making it work for you. If you do not pay the loan back, I do want to warn you that there will be a 10% penalty if you are not under 59.5 on top of the tax that you will have to pay. Keep in mind to pay it back in time, to pay yourself back in time, and this money is working for you pre-tax. Once your finances are organized, now we're going to review your withholding for 2025. Are you underpaying? Are you overpaying? To make this easy to understand, let's assume that I owe you money, and automatically there's a certain amount of money that is going to come out of my paycheck to pay you. I'm supposed to pay you $100 every month, but instead I'm paying you $150, $175, or $200, depending on how much I work this particular month. So you're collecting all this additional money during the year, and then at the end of the year, you come back to me, or I go to you and say, hey, I overpaid you, just give it back to me. And of course, you give it back to me, but basically, In essence, that is an interest-free loan. What would you have done with that money? Could you have bought something, invested it into something that made you interest that you could have used it during the year? I don't believe in interest-free loans. The best way to handle this is to keep your money every month, invest it, use it for things you need. I could do so many other things with it. I could go get a better car or buy clothes, travel, whatever the case may be. It's your money. You should be enjoying it. No interest-free loans. Get involved in your finances. It'll definitely make a difference and lower your taxes. How do we solve this? At the time that you were hired, you filled out a W-4. That is an estimator of how much the business, the company, or your employer has to withhold for federal income tax. What you're going to do is you're going to update this form, and you're going to make sure that they're not taking a lot. And how you're going to do this and figure this out is you can go to the IRS calculator. It is on their website, and they actually tell you how to fill that W-4 so they do not withhold additional federal income tax from your paycheck. Another way you could do is you could see your CPA. You can go to a tax preparer. We do this all the time. We see people. We can match it with the right person so we can estimate what you really need to be doing with your W-4. This will help you also not underpay. Calculate that now so there's no surprises in January, February, whenever it is that you file your tax return. The calculator will definitely help. And if you haven't already withheld, look at your pay stub. Look at your estimated tax payments. If you do not have enough, pay it now. There will be interest. The IRS will charge you if you're not paying them. And keep in mind, see how there will be interest if you don't pay them on time? So why are we giving them an interest-free loan during the year? Plan for major changes. Are you retiring? Are you selling your primary home? Are you selling a rental property? Did you get married? Did you have a child? We went through W-4 before, and that's why you would update your taxes that way. But if you have these major things coming up into your life, talking to a CPA, getting an estimated tax, research what is needed, what you will have to pay, and also how you will avoid paying. If you sell a rental property and you want to continue to invest, you may qualify for Section 1031, which is basically just investing all the money in another property. You sold your primary home. Do you meet the criteria to get the full exemption, whether it's $250,000 to $150,000 if you're single, or $500,000 if you're married? Now you must live there 2 years. Have somebody look at all those factors, or look it up yourself on the IRS website. See if you qualify. Prepare for that tax bill, or maybe you will not have to pay any at all when you have these major changes. You don't really know how these changes are going to affect you. Talking to someone now is what lets you know whether you should even be doing it this year or not. You will be able to be prepared. So 2026 doesn't arrive and just get you, and all of a sudden you owe a ton of money that you didn't even plan for. I've seen it before. People taking their entire 401k before they talk to someone and calculated their taxes, and they get a $50,000 bill the following year. And they probably used it for other things already. Talk to someone, get informed, find out what that major change, what's going to do for you, and it's not going to give you a huge tax bill next year. Last but not least, number 5, schedule your year-end tax session. W-2 earners or business owners? Do you have rental properties? Do you have investments? Are you making over $50,000? A business owner making over $50,000? You want to talk to someone that can calculate those numbers for you before the end of the year to avoid surprises. W-2 individual with a rental property, you want to do the same, or wanting to sell one. You want to look at those numbers before the year ends. All these things are not as easy. They come to me as second nature because I've been doing this for like 30 years, but I see how people struggle all the time with this. I see how people overpay, underpay, and they're stressed during tax season when a lot of that could have been avoided by just following this. But it is stressful. So this should basically help you put it all together and get you ready for the next tax season comfortably without all that stress. So don't wait until December. You may not even find me in my office all the time in December. Me or someone else or other tax preparers, December, everybody's in the Christmas spirit. Do it now. This is the time to do it. Tax planning, tax preparation, it's an ongoing process. It's not going to be a cookie cutter. It fits all. It's going to be different for every person. It must be ongoing and not waiting until October. For the future, do it throughout the year. Don't wait to get all these tips at the end of the year because you're already going to be stressed by if you decide to follow every one of these. Don't wait until the end of the year. Do it throughout the year. I hope you find these tips helpful, and I can guarantee you will lower your stress if you at least try to follow a few of them. This may just resolve your entire problem. Use them. If you have any questions, put them in the comments below. If you like the video, like and subscribe, and we will see you next time.